join us now to get a sense of what's driving sentiment in the market, talking about price action and price outlook, because investors are looking at a lot of data this week, and that definitely will drive prices in this market. We have Carlo Alberto de Casa, is a senior market analyst joining me via Zoom. Great to have you on the show.
Thank you very much. My pleasure.
So we see investors are awaiting comments from the Federal Reserve Chair Jerome Powell and the U.S. June inflation data for further cues on likely direction of interest rates. What are you expecting, and how will this impact gold prices in the short term?
First of all, in the last few weeks, we've seen the U.S. macroeconomic data, which are progressively slowing down. This means that investors are now expecting the Federal Reserve to become more dovish sooner or later, and this sooner or later is probably going to be sooner rather than later. Moreover, we just had today we've seen some banks predicting the Federal Reserve to cut rates even by 200 BPS by the end of 2025. Anyway, the main scenario, which has been very difficult for gold, considering that the interest rate has jumped to 5.50 to the record of 5% last year. Now the scenario should progressively become more supportive for gold, and that's why investors are already betting on bullion. The U.S. inflation is progressively slowing down, and the Federal Reserve should follow the data which are coming, also considering the labor data last week, which has been below expectation. Yes, we have a big news yesterday, better on Sunday. There was quite a significant news for gold, which is we come from China, because the People's Bank of China, the Central Bank of China, for the second month in a row in June, did not buy gold. After 18 months in a row where the Central Bank of China was buying gold, in May and June, the Central Bank of China decided not to increase the quantity of gold they are holding. But at the moment, we don't know if this is a temporary break, or if this is they will start again. If they stopped only because the yuan is particularly weak against the US dollar. What we know is that once the news was released 1 month ago, the news that in May they stopped buying gold, bullion price declined by almost $100. Yesterday we have seen gold losing around $35–40 from 2,390 to 2,350. But what is important, as you were showing a few seconds ago, that the price did not collapse. The price tried to rebound. The price recovered 2,360, and it was trying to jump to 2,370. Overall, bullion remained lateral, and year to date, so from the beginning of 2024, is gaining around 15%.
All right, definitely. I'm sure investors will be wondering when the central bankers will start buying gold all over again. But talk to me about what you're expecting for rate cuts. Is it going to come this year? Because it seems that's the main driver for gold prices at this time.
From my point of view, yes. To be honest, it's a few months that I'm saying we have been too optimistic. Someone was expecting 3 rates cut, 4 or 5. No, I think we'll see only one. But we'll see in September. Okay, if data are moving like we're seeing this week, we can see 2. But we are talking about 1 or 2. I don't expect the Federal Reserve to move. From my point of view, rates are going to be at 5 or 5.25 at the end of the year, because anyway, the Federal Reserve has shown that it's very concerned about inflation. The only things that can change this is if we are seeing the labor market slowing down significantly. In this case, the Federal Reserve could be more dovish. But for the time being, I don't see, at least from my point of view, the Federal Reserve doesn't need to be too dovish, because they would like to keep some the possibility of further cutting rates later if needed. Anyway, this is talking about the Federal Reserve. The ECB, the European Central Bank, already cut rates last month. I think they will cut the rates another 2 times this year, and now European Central Bank is at 4.50, and Bank of England, which is at 5.25, I'm expecting to cut rates at the end of the summer, and to cut again in the final quarter of this year. So anyway, the trend is quite clear, and many central banks are starting to cut rates in the next few months. Overall, this is a positive driver for bullion, of course. Even if the scenario can be different if we're talking about gold and silver, because of course lower central rates are good news for gold and silver, but if lower rates are coming because the economy is slowing down too quickly, particularly for silver, maybe we can have a problem, because a significant part of silver demand, between 40 and 50%, is coming from the industrial sector, while the demand coming from industrial sector for gold is less than 10%. What does it mean? If the economy is slowing down, silver will be much more impacted. At the same time, if the economy is slowing down, investors are looking for safe haven, for a place where they can be relatively sure when they put their money. Gold can play its traditional safe haven role.
Having your perspective, that was Carlo Alberto De Casa, a senior market analyst. Thank you so much.
Thank you very much.